Hello, this is Steve San Angelo from the SRS Rock Report with a new gold and silver update as of November 15th. It's Sunday afternoon before the markets start trading in Asia. It's also a preview for the upcoming Energy Cliff video, which will be out for the public next week on YouTube. All right, let's get started. Now, as I mentioned, I did this video for the gold and silver subscribers at the SRS Rock Report. It's got a lot of updated information. And it's why, with the energy cliff, why the US and global economy are heading towards a depression that never ends. And I explain there's a lot of updated charts about what's happening with the energy and how it's going to impact the economy, the debt, the precious metals, and most assets. So that will be released next week on Sunday. Now, several members have asked what's happening with the silver and gold prices. Some people like to know more of the short-term basis. Before I start with these charts, I want to let people know, the YouTube followers and watchers know, that this is the short term. This is what the technical traders look at. This isn't the mid to long-term fundamentals that will continue to improve as time goes on. But as we could see, this is a daily chart of silver. It shot up in July, and then the beginning of August, it almost reached 30. And then, as I mentioned in several video updates, it continued to trade in this symmetrical triangle. And I said, because it was hitting the bottom so much more than the top, I felt as if it was going to break below it, because the symmetrical triangle doesn't really give you the direction. Uh, so but because of it touching so much, especially here, it broke below it. And interesting, it retested the 100-day moving average, but this is where it remained to stay, right at this upper trend line. When it broke below the upper trend line, there's no coincidence that the silver price continues to trade off of the 100-month moving average. Now we could see the lower average here, the 200-day moving average is $20. We could see that kind of price if we have a major correction in the markets. But right now, silver will likely break above or below the 50 or 100-day moving averages. It's stuck right between it. So, but if we look at the next chart, which is the weekly chart of silver, we see the huge move up in silver, and then it's trading in another similar symmetrical triangle. So it can break above or it can break below. So I believe in the next few weeks, we may determine the trend, the short-term trend of silver. It also depends upon all the political situation with the election now. And so there's so much uncertainty in the markets. It's hard to determine how the market's going to react. But depending on which way silver breaks above or below this symmetrical triangle will determine its trend over the next couple of months. Now, some have asked about the COT report. I haven't done any updates because, as we could see, now this was as of November 3rd. They did not come up with the new, on Friday, they did not release the new COT report because of the holiday we had last week. That won't be released until, I think, on Monday. But it doesn't matter because, as we can see, the commercial short positions have been basically flat. I think there was 250 short positions added last week. And so now the interesting thing to keep looking at is back in February, when the silver price was $18.15, the net short positions, you could see it right here, were about 100,000 net short positions. And normally when you get to that large number, we see a correction and the price moves back lower. And then the commercials reduce their short position. So right about here in, I'd say May, in the middle of May, that's when silver was at a low. But what's interesting, right now, or as of last week, I checked the price, it was $24.33 on November 3rd. So it's still $6 above this low here. And the net short positions are only 59,300. So it'll be interesting to see, but we could see a continued, if we have a correction in silver, we could see that the commercial net short position decline, but there's a lot here. Even if the price of silver falls $3, $4, that would get that would get it to its lows. I mean, it'll still be $2, $3 above this when the commercial net short position is at its low. And that's a very positive sign for silver moving forward. Now, the gold price is interesting. The gold price is forming a descending triangle formation, and it has two moving averages, the 50 and 100 a day moving averages are converging. Normally, when we see these two moving averages converge and the gold price is below it, it's difficult for it to break above it now when they converge. And it's converging also in this downward descending triangle. Now, yes, gold broke above it briefly, and then it came down on the Pfizer news. That was that news that came out. It knocked the price of gold and silver down. But we could see this 1850 is a major support level right now. And a descending triangle normally means the price is going to head lower. Typically, that's what a descending triangle. And so we had the opposite with gold going up last year. It was in an ascending triangle and it broke out. So it'll be interesting to see what happens over the next week or so. But I do believe if we look at the next chart, which is a weekly chart of gold, gold in the weekly chart still shows highly likely retest of the 1800 level. And I also show this on my longer term charts for the subscribers at the SRS Rock Report. 1800 has held for a long time, and we broke above it. Normally, when you see that, it'll retest it. So I still believe it may not happen this year. It could happen sometime next year, but I still believe the gold price will retest this $1,800 level before moving higher next year. And with the COT report, there's not much to say with the gold COT report, except that back when gold had the highest net short position, similar to silver, the gold price was 1604. The net short positions were 380,000. Now with a $300 plus higher gold price, this was as of November 3rd, the net short position was 289,000. About not quite 100,000, about 90,000 less. But we could still see there's some room. If there's going to be a sell-off, the commercial net short position would continue to decline. So it's not towards its lows and it's not towards its highs, but it's been trending in the same fashion for the last several months. Now, here's some updates on the U.S. Mint. We're seeing some very strong sales of U.S. Mint. We had another million in a week from November 3rd to November 9th. It increased from 1.6 million to 2.7 million. And we look at this next chart here, we could see what a difference. Actually, this is for November 9th, compared to the full month of last year. Last year, there's only 463,000 Silver Eagle sold in the full month of November. And right now we still have half a month. So I think we could see upper 3.5 to 4 million for November if sales continue to remain strong. Now, Gold Eagle sales have also increased significantly this year. Now, this is for January to November 2020. There's 744,000 ounces of Gold Eagle sold so far this year. It's nearly five times the 152,000 ounces sold full year 2019. I believe we could see this. I don't know if it's going to reach 800,000, but it's probably going to be 770, maybe 800,000 for the full year. That's very strong. And if we look, I just updated this chart today. This is as of November 9th. I believe we're going to see a new update, but what a difference. It's now at 27.2 million so far in 2020 of Silver Eagles. And just as I showed you, it's 0.74 million, 744,000 ounces of Gold Eagle sales. So we had a big improvement from last year. I believe this is just the beginning. We may reach 30 million Silver Eagles for the full year. We may. So we're getting back up to this high level that we saw after the 2008, 2009 financial crisis. And Total Silver Eagle sales to date since 1986 are 562 million and almost 24 million gold eagles. And this is the estimated value based on current prices. So again, I think next year, if we see the same kind of Silver Eagle sales or even higher in Gold Eagle sales, I think we're going to see much higher prices. And then we get to factor in this. I published this for the silver members at the SRS Rock Report, but I wanted to share it with the public. The growth in global silver and gold ETF demand. This is just January to September. It was 9,300 metric tons. That's about 32 million ounces of silver. Supposedly went into the global ETFs. And now I don't know if all that silver has gone in there, but that's just it. When you see retail investors move into the ETFs, whether it's in the United States, Europe, a lot of German, we see a lot of German buying in ETFs as well, and as well as the UK. When you see a lot of investors move into silver, that means they're becoming worried about the overall system. And so it's a very important indicator of the demand for silver moving forward. Now, the gold ETFs, this is the best year ever. 1,000 metric tons went into the global gold ETFs. Again, we don't know if all that gold is in there, but that is a major indication that the retail investor is now becoming worried about the markets. And if we see the same kind of demand next year or more, we're going to see much higher prices, because I think there's not that much more available silver I mean, the amount of silver that has been consumed by the investment, whether it's physical or ETF, is 75% of global mine supply this year. Now, if we have the same demand next year, we're going to see much higher prices for the metals. Now, I also wanted to share some of the articles that we have for the subscribers. If you're interested in silver mining stocks, I put out this article, Silver Mining Stock Investing, Learn How to Pick the Better Stock Based Upon the Correct Valuation. To me, there's a lot of stocks that are being promoted that I don't believe that their valuations are there. Either they're penny stocks, they're junior explorers, and they're being promoted not based upon real merits, but they're getting paid to promote the stock. I actually provide fundamental valuations, why stocks trade, or they have these valuations. So that's an excellent video to check out. And then I have this one that for the gold members, Silver Mining Stock Analysis Results for Q3 2020 performed as expected. I did extensive analysis on Pan American Silver, Endover Silver, and First Majestic. When the financial results in many of the primary silver miners, the results performed as I anticipated. Thus, the financial metric used to forecast the change in these primary silver mining stock prices turned out to be a reliable indicator. So if you want to understand where the stock prices of these companies are going to move to, it's not based on hope, wish, speculation. It's based upon fundamental valuations. If you want to check that out, that's at the SRS Rock Report. Now, one of the things that is an indicator of the health of the economy is the copper price, or the copper market. That is the king industrial metal. And what we've seen since the pandemic and the sell-off in the markets, copper, like the precious metals, and has shot up considerably. Now, this is a weekly chart showing that this $3.30 is a major resistance level for copper. And now we're seeing copper move up in a bearish flag. Usually when it moves up in a bearish flag, it's going to correct below it, not above it. So we could continue to see copper move higher, maybe up to this $3.30 level. But to me, it's setting up in this bearish flag. I believe we're going to see a reversal here shortly. And if we look at the copper COT report, this is what's interesting. Back in the beginning of 2020, the commercials were net long, 43,000 net long positions in copper. And that's when the copper price was trading at $2.58. I believe that was in February 25th. Now we're at $3.09. That was last week. It's even higher now. But now the commercials went from being net long to being net short, 65,000. So the commercials are setting up that they believe that the copper price is going to correct lower at some point. And if we look at this longer term, this is from bar charts. It's back to 2016. We see the commercials are in the red. And this, I just showed you that when the commercials are net short, that's when we have this red. And we can see that happens when the price went up. When they went net long, this is when the commercials went above, they went net long, the price was selling off. And so what we have right now, this is that switch back in February, right here. This was in February. They were net long and now they're net short. And so at some point in time, I believe the copper price is going to correct lower. And I'm going to do another video in a few weeks. There's a notion that we're going to move to inflation. And I believe that's a very high probability if the Federal Reserve moves forward with their digital dollar policy. And I'm going to explain this more in detail. The Fed and central banks have been doing QE, printing money and doing QE and buying assets. They're buying either they're buying stocks, they're buying treasuries, bonds, or they're buying mortgage-backed securities. Well, that's what that does is when you're buying a bond, that puts the interest rates low or negative. And the Federal Reserve does not want to continue doing that. So how do they stimulate the economy without issuing debt, like that's what happened during the pandemic, to send money to all the Americans because they were out of work? The Treasury had to issue debt and then sent the checks. What the Fed wants to do now is they want to come up with a digital dollar policy where they would send you money, digital money, right into your account, but it would be on the Fed's balance sheet, not on the US Treasury. So there would be no increase in debt. And that would mean that they're not buying the bonds, which would help them not push rates lower. That's inflationary. That's when we could see commodity price inflation. We could see energy price inflation. We could see food price inflation. That's consumer price inflation. Right now, we're getting asset price inflation, whether it's stocks, whether it's the bonds, real estate. And so if we see the Fed dollar policy, digital dollar policy go through, then we will see commodity price inflation. And that's a different segment than what's happening right now. So on a short-term basis, I do believe, even though copper may move higher, I do think it's setting up for a reversal. And again, that's going to depend upon what happens in the broader markets with the political situation now with the presidential election, how that's going to get resolved by next year. But the markets are still considerably overvalued. At some point in time, we are going to get a massive correction. Now, this is one of the slides that I'm going to discuss in the Energy Cliff video that's coming out next week. And maybe many of you have been hearing about me talk about the Energy Cliff. This is it. And we're seeing it in many different places and in many different ways. And they're all starting to look the same. This is my interview with Dr. Louis Arnault, the thermodynamic oil collapse. You can find it on the SRS Rock Report YouTube channel. And this is Gail Tverberg, Our Finite World. She is an insurance, she works in the insurance industry as an actuary. So she looks at numbers all day long. So she's not a big conspiracy theorist. So she's showing a similar big, they call it a Seneca cliff in consumption. So we're starting to see these energy cliff charts merge now. Well, I'm seeing more and more of them. And if you understand what that means, it's a total different world. We're heading into a total different world and we're not prepared for it. And unfortunately, technology isn't going to solve the problem. It only makes it worse. Now, why this is another chart I'm going to describe in the, I'm going to explain in the video next week. I just want to give you a little preview. The energy cliff, and the energy is the fundamental value that runs the economy. Right? Energy is the fundamental value that runs the economy. And right now it costs about $1,300 per ounce to produce an ounce of gold. Takes a little bit more money to mint the coin, but about $1,300. Now, the US Treasury, to produce a $100 bill, it's only 20 cents. So if you print 13 of them, it'll cost the US Treasury $2.60. Now, if you take the $1,300 cost to produce an ounce of gold, and then you use that to print these $100 bills, you can print 650,000 worth of $100 bills. So why is the reason why fiat money, dollars, doesn't have an intrinsic value? Because at the energy that it takes to produce the bill, it's very little. The energy that it takes to produce a gold coin, it's massive. Matter of fact, the price, $1,300, most of that is all the energy, not just raw energy, fuel, or electricity. It's all the energy from human labor, management, the capital to build the mine. That's all based upon energy. Even the materials that are sent to the mine, all those come as a product of all the energy to produce them in the whole supply chain. So gold gets its value because it takes a massive amount of energy to produce it. A dollar bill doesn't have any value because it takes no energy to produce it. It's paper. And so this is a very important understanding of why the precious metals are a high quality store of value. So please look out for the coming Energy Cliff video next week on Sunday. And I do thank you for watching this newest update. I will be providing updates now about every week, at least 3 times a month, maybe 4 times. But please look out for the Energy Cliff video. And if you have not yet subscribed to the SRS Rock Report YouTube channel, please consider doing so. Thank you.